The US government could shut down by Friday, and the market is treating it like a fire alarm. Prediction markets are assigning roughly 80% odds when this kind of uncertainty shows up in the market. Capital does what it always does. It tightens, it hides, then it rotates. So here's the part most people miss. A shutdown is rarely about politics for markets. It's about confidence. It's about liquidity behavior and how fast fear spreads through portfolios, and hopefully not yours. In the next 10 minutes, I'm going to give you an investor framework for the shutdown countdown. 3 signals, simple and practical. Today's video was prepared for investors who want to protect their capital, if you want to stay positioned and avoid getting emotionally wiped out. And just as a quick reminder, this is purely educational content. It's not financial advice by any means. So all right, let's get started. What does a shutdown actually change? Well, first, it injects uncertainty into everything. And investors and markets hate uncertainty because it breaks models. It breaks timelines and expectations. And secondly, it turns markets into a headline machine. Narratives start driving price because the story becomes the data. Thirdly, and this one is easy to miss, a shutdown creates data fog. Why? Because reports get delayed, updates slow down, visibility drops. And when visibility drops, volatility tends to rise because people trade fear and positioning. So keep that in mind, because this shutdown risk is arriving at the exact moment another signal is already flashing. Let's start with the US dollar. The dollar has been sliding this month and is sitting near multi-month lows, following one of its weakest annual performances in years. Now let's take a look at where money is flowing, where it's going to instead. Gold, we see, is breaking to fresh all-time highs, and silver is moving aggressively higher as well. And here's why this is so important and crucial for Bitcoin investors. Because when gold and silver behave like this, the market is voting on currency credibility. It's a shift towards hard assets, a quiet admission that protection matters more than growth narratives. Then there's the ratio that ties this all together. It's known as the Dow to gold ratio. And right now, it's sitting at levels historically associated with major regime changes, periods when the economic system was forced to adapt through policy responses. And you don't need to agree with every dramatic conclusion to take and extrapolate the lesson. When equities lose ground relative to gold, the market is telling you safety and scarcity are in demand. Now hold that thought. Let's put a pin in it. Because crypto is showing you the other side of that fear, the other side of the coin. No pun intended. And the other side of that coin actually shows us what a washout looks like. Bitcoin has just experienced one of the largest realized loss events in years. This is significant because realized losses mean coins actually moved at a loss, as it sounds. That's pain being locked in. That's capitulation. Now, if we zoom out to the institutional wrapper side, global crypto investment products just saw their largest weekly outflows in months. Flows pulled back sharply as rate cut expectations faded. Price momentum turned negative, and some allocators questioned why crypto hasn't yet responded to the debasement narrative. That last point is crucial because gold is behaving like debasement is here. Silver is behaving like debasement is here. And crypto, at least in the short term, is lagging in the minds of some investors. And if we add one more structural data point, Bitcoin just logged one of its weakest weekly closes since Q4. And here's how investors frame this properly. This is a market that has been de-risking. Leverage has been flush. Weak hands have been forced out, as they always do. And yes, that's uncomfortable, but it's also a normal element in a longer cycle, as we know we're in. And we at least know we've broken away from the 4-year cycle. That said, when sentiment looks most fragile, you get the counter signal. And what is this counter signal? Well, you can see it in one of the biggest buyers because he keeps buying. The block reports Michael Saylor's strategy bought another 2,932 Bitcoin. for $264 million, which now takes their total holdings to 712,647 Bitcoin. Love or hate strategy, what they represent, what their ongoing purchasing represents, is powerful. What strategy is doing tells us that conviction capital is still accumulating, as should we. And what's interesting here is that while flows are bleeding out on one side of the market, a major buyer is adding, nevertheless, on the other side of the market. And this creates tension. And in markets, tension often comes before resolution. Now, before we get into the 3 signal checklist that I prepared for you today, we need to take a look first at the calendar, at what's coming up. The next Federal Reserve meeting is at the end of January, coming up here soon in the next week, and markets are overwhelmingly pricing no change. That's significant because when expectations are locked in, everything else carries more weight. Headlines carry more weight, the dollar, geopolitics, risk sentiment, and right now, the shutdown countdown is landing in the middle of a broader volatility stack. So let's lean into that a little bit because geopolitical tension is rising again in the Middle East. Trade friction is also reemerging, with tariff threats and stalled negotiations adding another layer of uncertainty. And if we put it all together, the shutdown risk, geopolitical pressure, trade conflict, this is the kind of environment where markets whip from fear to relief and back again. So be prepared for that. Investors don't need to predict the headlines. They need a framework that keeps them from getting emotionally liquidated. So here it is, your checklist. Signal number 1, the dollar. A weakening dollar loosens global financial conditions over time and nudges capital towards more scarce assets. Gold breaking out reinforces that regime shift. Silver's behavior confirms it too. So watch whether the dollar keeps bleeding or starts to stabilize. That will tell you whether pressure on risk assets is easing or intensifying. Signal number 2, forced selling. You're not looking for a perfect bottom. You're watching the character of selling. Is the market exhausting itself, or do liquidation waves keep refreshing? This is where investors win by staying slow and systematic. Proper position sizing, patience, avoiding leverage, which I always discourage actually, avoiding emotional decisions. Okay, now here's signal number 3, and that is in leadership. During stress, capital consolidates into what the market trusts most: Bitcoin, high quality infrastructure, clear product market fit, deep liquidity. This is not the environment where everything rallies together. It's a sorting phase, and that's why continued accumulation by long duration buyers matters as a signal. So as we close out, here's the story of the week. The market is pricing a high probability shutdown. The dollar is already soft. Hard assets are acting like they're in control. And crypto has been bleeding through realized losses and outflows. And yet, the largest conviction buyer, Michael Saylor, keeps accumulating, a lesson for us all. So this is not a week for prediction contests. It's a week for just staying steady, staying disciplined. Watching the dollar, watching your signals, watching forced selling, watching leadership. Investors win by staying positioned for regime shifts, while everyone else is trapped reacting to headlines. So if today's video helped you, you can hit subscribe. You can definitely like the video. And most importantly, what matters most to me here is that you share my videos with new people. My goal here is to keep you early, to help you see the storm before it comes, to help you connect the dots, and to help you understand things along the way. I love you guys so much. That's a wrap for today's video, and I will catch you guys here tomorrow. Take care.